Thank you, MC. Assalamualaikum and very good morning still. Sorry, suara bel ni banyak sesama yang banyak orang kena influenza A. First of all, thank you very much for coming to this session. Of course, to NICE in general. I think we have listened to a lot of conversation, a lot of preaching, a lot of issues, challenges that we are facing. And today, I want to try to go now more on the financing part. Even though, first of all, kena terima kasih mesti apa bioeconomy, everything lah semua, and everybody lah. So, I think when we look at the grand total of commercialization or innovation model or business model in Malaysia, we look at the 4 things, which is for me is looking at more management, pengurusan. Of course, then I look at the market, then I look at the technology, and the last thing is, the final is of course the financing. Mana nak cari duit, pembiayaan tu kat mana? Kalau bercakap je, duit tak ada fulus lah. Kita kerja pun kena ada gaji. So kalau business pun, we have to have a funding. Funding of course to push the company, and of course, the hope, whatever the money we put into a company or into our activities will generate more money. So, and a lot of issues on this financing, especially on the early stage. So, for me, when we look at the financing right now, it's big scope. Where you get the money, the source of money we are getting for the money. Of course, for the early stage companies, innovation, R&D, first is coming from your own pocket. And second is you get from 3F lah, family, friends, and fools. Because only fools sometimes believe in your crazy idea. And of course, grant and so on. But right now we cannot depend on a lot of the current development R&D in Malaysia depending on grant. And I think we cannot, grant is getting lower and lower by each year. Because we have to balance between the whatever government is putting and whatever the private is coming. So this is blended financing, is try to pull all this funder together under certain mechanism, multiple instruments, but meeting one goals, infrastructure, whatever big goals that we want to do for the company. So, but each of the funder understand your business, understand your needs, and also meeting their targets, meeting the criteria. That's the hardest part. Of course, giving you the money is easy, but we bring all this developmental funding, private equity, venture capital, and of course the lending part. Have you talked to anybody that get orang bagi loan untuk buat R&D? Tak banyak dengar lagi kan? Memang tak ada pun. But I think something that we have to really inculcate, how we make sure that our financial institution start coming into playing ball with us into this area of financing innovation and business model. Please interrupt me anytime, because this is only a theme that we at MTDC want to push, because we cannot depend into one instrument, one product to solve our current innovation model, current innovation issue. So when we look at this, the blended financing, we look at how we bring the private equity or capital, the lending part, development funding that coming from people like MTDC, MOSTI, and few others agency under MOSTI and few others ministry. But you want to blend this product, multiple product together into we call this blended financing. Bukan masuk dalam blender. Kalau boleh macam tu saya nak buat juga lah. Ambil all the financing, masuk dalam blender, kamu smoothies. Cantik. But this is not. This is something, the blended financing want to achieve one goal. to make developmental funding understand about the outcome. Because for developmental, of course, we want to see the financial return, but our more important thing is the outcome. But for the private equity part, the lending part, lending easily loan, you bayar balik lah tiap-tiap bulan. But as a startup companies, can you do that? You baru buat, suddenly you kena bayar balik tiap-tiap bulan. But private equity have the term, or VC capital have the term, So I want to invest in a company that at least give me IRR of 15%. MTDC kita lower benda tu sikit, tinggal 10%. But still a requirement for them to make a capital return. But how long is gestation period for that capital return? So we can play in that, So maybe we put the certain grant money that can pay back certain loan that you bring in, so it can be like a continuous, progressive of funding process, but at the end of the day, you bring a company to the next level. So this is about blended financing. So it's just easy said, but then doing real. But we feel that this is the only way, because there's not much money, free money, when free money is grant coming from the government. So, but government right now, we want to bring more private investor into the game. And we want how the incentive that we can bring into the state right now for equity crowdfunding from P2P right now, where we bring the equity to blend into our development of a company. So looking at this, I think this is normal process, how you bring the idea until to the market. And you look down there, from basic R&D to pilot to pre-com, commercialization. That's only our innovation. And sometimes, I don't know, from my experience, from the research basic all the way up there, if you're talking about 5 years, it's short. It's more than 5 years sometimes. I have a company like working with come on with the vaccine. 10 tahun tak ke mana lagi. 10 tahun pun tak sampai commercialization. So, but how are you finding this? Because as you go, you need to finance your capex. You need to finance your OPEX. You need to finance the certification. You need to finance the pilot and all these things. Who want to give you? And if you bring drugs, it's actually more than 100 millions. But if you have little, other kind of technology, maybe little. But you have to see that horizon of where the money coming from. Most of the R&D people fail because they say, okay, tak apa, sampai kat situ je. Sampai pilot, I know somebody will start believing in me and people put money. No, it's not that easy. To make people believe in the product is more than having the lab skill. How you want to come up with a pilot, that need a lot of money, from lab to pilot. So all those things is a long horizon, and this is need money. Of course, need the talent, the researcher. So also during the process, how you want right now talking under blended financing that if a problem out there by a company right now already established, they say, okay, I want to do something. It's talking about market pool. So if they say there's a problem, if we can marry then this with the R&D down there, straight away you have a smooth financial flow, funding of research coming from the private company that willing to solve their problem. Instead doing on their own, but they want to going through this process, working with you as researcher or startup companies. So this talking about only an innovation model from basic to Chrome. But when you go further, this is looking at the venture capital model, the equity model, how you start from the seed, pre-seed, all the way to the capital market. This is how many years? I think the best one for MTDC, maybe you do better. Best one for MTDC, we start at seed to IPO. The best we do so far is 6 years. Dah habis dah. Kalau venture capital dia nak 5 tahun je. 5 tahun dia kata nak tutup buku. But how you play along this gestation period, how you bring at the each stage, at seed, pre-seed, who are investing in you? Seed, Series A, Series B, Series C, mezzanine, growth, mezzanine, pre-IPO, IPO, then of course, easy. Because when you go IPO, tak apalah, tak ada banyak issue of, because money dah ada. Right now, you have to do a scalable business that grow every year. And along this line, all people said, where's the market? Where's the market? Where's the product? How good is your product? And while we're doing this process, there is parallel. Other people are doing the same thing that you do without you knowing it. That's another test to this equation of the time horizon here. So this is not scary, but now I should go here first. This is the scariest part. People a lot talk to us about value of death, which is between the early stage until Series A, but here we said until seed. But I don't call it value of death. I call it tunnel of love. You know what? Value of death, you talking about you going to die, I'm talking about love, tunnel of love. You can love what you're doing. You can bring the investor like what you do. They're willing to go to this hardship of the company. So that's why I said you should listen to banyak lagu-lagu macam Tunnel of Love ni, because bring you spirit. So, but absolute stage, this is a normal company stage. But sometimes the value of death is not just 1 year. Sometimes the value of that can be 3 to 4 years. And can you imagine at that time, during that value of that, where's the capital to fund your process? Where's the capital to fund your R&D before you bring even the Series A investors? So along this, you need a way of blended fund resources from somebody out there. So this is the thing we're talking about, the blended financing. So this is an example of MTDC, how we do not so much blended, because it's only coming from us, mainly coming from us. So we blended into the process. When you look at our stage, we start with grant. Then second stage, we combine grant and it's loan but we call it convertible promissory notes, because we give the notes where we can convert. If doing better, we convert into preference shares or equity. If not doing better, you pay us back. So that's we're playing between the loan and the equity. Then after that, but in the second stage at CPN, that we start. Sometimes we start blend between CPN and grant. So maybe we don't give you all the CPN, we give you partly of grant. Because some of stage, you need certification. No, you don't get money by doing the certification. So we said, with this money, we go for grant. But for the people, you have to pay us, under CPN. So that's we start to do the blending. Then we do the blending further. So we go into CPN full, convertible promissory note. So there's more grant for you. Right now, you have to make sure that you start putting the skin in the game. So you have to come out your own money. So this is the toughest one, because sometimes it's not easy to get a loan or CPN. So then we go to the next stage. We blend right now CPN and equity. We put partly, we said coming equity, then we put CPN. And it comes to first stage of quasi-equity, which is, we call it convertible preference share. So you can make convertible, redeemable, preference share, whatever name that lah. But then it's preference shares. So it's higher than equity, but it's not ordinary shares. So we start blending that. Then next, after that, sometimes people go to ordinary shares. Put your money, why no preference whatsoever? So you put your money, you make sure that you get the money back if somebody buy your shares back. or you get the dividend. So along the process, but you look at the stage of what we're doing, At the early stage, mainly the grant. Later stage, more the equity part. And the later stage, this is where we want to bring the lending into the ecosystem, loan lah. So how you get the loan from the DFI, for example. How to get the loan from the P2P. How you get to loan, and how you blend in the next level of ECF. Because at MTDC, also, we are investing in pitch-in, because another platform for ECF. And we are also working with Microleap and a few others on P2P. Because we see that at this certain point of this time, we can bring the crowd to participate in the company, to understand your business and so on. So these MTDC things that we do come to the blended financing. I said about this just now. So no, this is that. Sorry. Okay, this is another example of how we do the blended financing. This is the first time we did. We bring the DFI into our funding program. We start with this, but this is under the MITI program. We call under Aerospace Fund. Aerospace, Electronic, Electrical, Innovation Fund, A3EIF. So this program is not just we coming first. We have to coming together with financial institution. But how to bring the financial institution into that is another things that we have to really make. In this case, we have working with MIDF and MBSB because they call it, their loan is sweet and sour. Why is it sweet and sour? Because MIDF giving a lower rate, I think below 4% or 4%. But the MBSB part coming the sour one, which is about 8% or 6%. But in combination of this, we can lower. And this is the money coming from the government. So that is the lending part. But for us to cushion this lending, we provide, under our program is where MTDC coming in, you can look at that side, is we put the equity of preference shares, not equity, quasi-equity. So whatever we do in this program, we have two-stage process. First, MTDC come in. We look at the technology, we look at the business model, we look at how your gestation period, how is your runway, the money that involved. We start this with aerospace because aerospace need a lot of money. Our first case and second stage, example in this company, the first company is asking for 40 million. The other one is asking about 50 million. So I don't think there's a grant process or equity that want to come in that big money into any companies. So we said, now we have to bring the financial institution into the game. So that's the thing, we say, okay, MTC, look, we have to make sure that the technology is good, the order is there, the runway is there, the people is good, because that's why this one is have to couple. There's a blended all the way. We have to see the contracts coming from the Boeing and Airbus subcontractor, which is Spirit, Collins, and so on. We have to see that contract come in to support your loan. We believe in your product. MTC, no problem. We've got equity. We can play along. But for the blended one, for the financing loan, they need to be paid straight away. Maybe they give you a short period that you, maybe by second year, you need to pay them. So there has grace period there. But after grace period, we still have to pay. So how you want to pay? Because we have to look at the orders coming in. But the problem is about aerospace that we are blended again because they have to put all the capex first. The order will not come in until you do the capex, you test the first product from your manufacturing line, only they give you order, even though they promise you. But once this order coming in, they have 15 years order coming, at least. because of the industry itself. So they said, when we look at this, we have to blend everything from the orders coming in, from the runway of the business, and whether the financial institution willing to take the risk coming to us, with us. So the other things about this company, we look at the gearing ratio also. The gearing ratio of aerospace at this stage company is very high. So that's the reason also, we not just put equity into the company, we put equity because we want to lower the gearing ratio. So right now, in this company, for example, that we are coming, we are gearing the ratio is from, I think, about 7 to 8, maybe going to 4, gearing ratio. So, but it's not an easy, easy task to do. We need a lot of money. But if we can start this example, I think we can do this with other technology as well, not just aerospace. But this is what I'm talking here to bring these people awareness that something that we can do, something we can move forward in terms of blended financing, because one instrument doesn't resolve all your needs. Because certain needs in terms of your financing, maybe can finance by the loan, maybe certain finance by equity, and some this need to be financed by the grant. But you have to remember, all these parties provide you grant, provide you equity, provide you with loan, they have their own objective. But the toughest one, of course, the lending, to bring lending into this. Because for lending, whether you can pay or you cannot pay. But that's another equation that the lending bring it, which is collateral. So in this case, we bring the orders as partly as collateral. And our money, where we put equity, also become the collateral. So that's why the DFI start believing in us. And this is DFI, not commercial yet. So we start at that DFI first. Developmental Financial Institution, people like MDF, MBSB, Agrobank, SME Bank. So this is the people that we try to play with now. We hope this blended financing model can show good traction, good track record. As we go along, we will bring in more financial institutions to play with us. This is like playing a game. So if the game becomes interesting, a lot of people want to join. Kalau you play dekat Malaysian Cup, susah dapat sponsor kan? Kalau play kat EPL kan, banyak sponsor. Hari ni ada dengar apa Ronaldo dah become first billionaire. The first footballer become a billionaire. Itu bring football. So look at this. MTDC playing. Of course, MTDC get the money from MOSTI. DFI, of course, they raise their own money, and some money coming from the government also, MITI. And of course, we have to look at the orders. And this is, we're talking about the tier of, okay, this is another blended thing. When we look at it, we look at supply chain. Where are these people that we're investing in, or we put the money in the tier? Because in this process, we look at tier 4 company. So tier 4 company will provide, tier 3 company will provide to tier 2. And tier 2 will go to the Airbus and become their tier 1. So this is the process. So we have to see. And this is part of the game also. We want to bring our small companies at tier 4 going up the ladder, tier 2, tier 3, tier 2, and tier 1. And of course, as we go up, the requirement for funding is more and more. So that one example. Second example is, this is what I missed before. We call this FCR, Future Ready Financing. This is not totally blended financing, but how we work with MIDF right now to fund a project or of companies that at a small stage, but they cannot buy the capex. Because a lot of SMEs have problem in terms of productivity, in terms of expanding the manufacturing or the processes. So where we're working, MIDF say, okay, we can help you to finance, but you need a two-tier party. So SMEs, technology provider, and the financing. So MIDF, we work with technology provider that MTDC investing in to give you the capex. So the company don't have to pay a high capex, but just have to pay a sort of like to share the revenue model with the service provider. So there's another thing. So there is a financial, MTDC, equity, and provide the growth possibility working with the technology supplier and with the SMBs. So this is another model that we're talking about blended financing. So overall, I think that's all what I want to say, because whatever is stage of this development, you need a continuous multi-agency, multi-financial model in order to bring any innovation or any companies going up to the ladder as you go to the value of the Series A, Series B, or even the innovation model from, say, basic to pilot. I forgot to mention that at the pilot and right now, we call Sandbox. Sandbox also a multi-tier program because we have to do a faceted way of doing things. So after TRL 5, you go to TRL 6, we will sambut you at TRL 6, but we hope somebody will find this TRL 1 to TRL 5. TRL 6, we say, okay, we give you Sandbox. We want you at the first stage in a safe model to test your product, to validate your product, to validate your technology, and to look at whether you meet all the regulation. And after this, and this is a grant program, but when you come to certain, after that Sandbox 1, Sandbox 2, we go Sandbox 3. Sandbox 3 is commercialization. So you finish TRL 6 to 8, then you come to 9, we will fund you eligible companies, not everybody will get, Sandbox 3, which is we give up to 4 million, but we start blending. You're not getting the grant anymore, you're getting whether equity or CPN, plus grant. So we start blending that as well. Even at that, we call it Sandbox stage. So that is what we're trying to do at MTDC. And of course, not mentioned here, at MTDC, because we do our advisory, we will bring in investor, other private investor coming together, because we want to show this is mostly, this is MTDC, and this is funded by, with a good technology, can we bring some investor also? Which is, we do it before, I think under our previous program, we call commercialization of R&D fund, we managed for any that commercialization stage, we put RM1, the private money will come into the venture is about 0.7. So, mana RM1 grant bagi, 70% coming from the private investor. We managed to do that in our CIDF program. So it shows that it can work. But the trust in you to come up with a good technology, having good people and good market. If you have these three things, I think the money will come. We can do the blending, we can do the whatever ways, but these three things must. If you have so-so, semua so-so, kami pun nak bagi duit so-so. So, kalau kita bagi duit pun, that's a problem. This is about blended financing. Sometimes we give you money, but we put a lot of condition into that money. You kena ada dapat ni lah, kita bagi you in milestone basis, milestone 1, milestone 2, milestone 3, milestone 4. So sometimes you nak dapat duit pun, orang ni nak bagi duit, kau tak nak bagi duit. Tapi because you are so-so, because we also have to manage our risk. Because remember, all this process I cakap tadi, involves risk. Because you tak kaya lagi. And you tak betul-betul dapat duit lagi. Because you bukan IPO lagi. I tak boleh jual pun. Even though I put, macam orang kata kat convertible preference shares, renewable convertible preference shares, I cannot redeem you. Even though I have shares, I cannot redeem. We say, you nak redeem ni apa? I tak ada duit. So whatever test on that financial tak akan dapat. So sama je. We have to take risk. So we put a lot of condition in that blended financings. Bank will have their own condition, MTDC own condition, of course government also condition. But if you can prove that, take example of banyak orang tengok Grab kan. Grab sampai sekarang tak untung kan. Kalau ikut that model, this blended financing go tak boleh dipakai lah. But right now, we feel that if we can prove the good model, because we have to show this, one is innovation model, one is your business model. If these two come together, we can have a continuous funding flow for your business. So with that, I end up my presentation. So I welcome question, if any. It's not easy task too, but this is depending, macam I cakap tadi, it's really have to look case by case basis. We try to aerospace, we try to some other so-called product company, but we have not tried with drugs and vaccine because we need a lot of money there. But this is something we have to be not just innovative in our products or our processes that we are coming, we have to be innovative in our funding program as well. That's only we can try to help the innovative companies like you out there. With that, thank you. Assalamualaikum warahmatullahi wabarakatuh.
Thank you again to Technologies Haji Mohammad Hazani, Haji Hassan again for that inspiring speech. And of course, Tuan Haji, we would like to show our appreciation. Thank you so much. And we would like to also take a photo as well. Just a very quick photo session.